Hey guys, Sean here. So gold recently smashed $2,000 and you're wondering if the train has left the station. Am I too late? Should I get in now or am I just chasing prices? And here's the truth, there's never going to be the perfect time to buy gold. Our very human nature wires us not to take risks at all, and no matter what the price is, we cannot make excuses not to get in. So if the price of gold starts to fall, we'll be paralyzed with fear. If the price trends sideways and does nothing, we'll probably be bored to death and wander off to the next shiny thing. And now we are facing with something quite good for gold, isn't it? It's rising and yet we are quite terrified of buying. We fear the price might suddenly come crashing down and maybe looking a little silly if we get it now. What is going on? And in this video, I really want to discuss the long-term fundamentals of gold, how the current situation has really strengthened it. It is really the perfect storm where you combine money printing and invasion and people all panicking and piling into gold. The thing is, we are dangerously near the peak price of gold back in 2020, which was somewhere around 2072, and if it goes above that, we are truly in uncharted territory and no one can predict how high gold can go by the end of the year. And I really want to take my time here and go through three major things that will change the fate of gold and really drive demand for it down the road. So if you didn't know by now, inflation is currently 7.5% and it may hit close to 8% very soon. And the thing about war is that it's really a costly affair and it involves a lot of money printing to buy weapons and oil, whether you're the invader or defender. And this is the situation we are really seeing in Ukraine today. Now, the United States has already been funneling over $2.7 billion of aid to Ukraine since 1993, and this amount is only going to balloon higher. So far, the EU is giving around $500 million in weapons, and the US is following suit with 350. And this essentially is a military bailout to help Ukraine fight Russia. And while it really isn't directly cash, it's still a lot of money being given. And if you think things can't be worse, Biden has just agreed to provide $13.6 billion of aid to help Ukraine now. So if this isn't money printing or inflationary, I really don't know what is, right? And the big issue with this is that, spending this kind of money is only going to weaken the US dollar even further. How exactly the money comes from, we don't know, but either way isn't good. So the problem is that if the United States government prints the money from thin air, it will just directly increase the money supply, and we all know where that leads to, right? Higher inflation because there will be more dollars chasing fewer goods. It's very elementary. Now, if they decide to raise the money through domestic debt, such as by selling bonds, it might not raise inflation immediately, but the debt and interest payments will have to be settled down the road. And unless you're living under a rock, the United States national debt has flown well past $30 trillion. This isn't good as well. So it seems that it's either higher inflation down the road or bigger debt bubble that might explode and totally collapse the confidence of the dollar. We are really caught between a rock and a hard place here. And this brings us to the second part, which is sanctions. We already know that Joe Biden has imposed a laundry list of sanctions on Russia. They have blocked Russia's ability to transact in dollars, euros, and pounds, and most of the Russian banks from using the SWIFT system to do business, right? Now, this is essentially the financial nuclear option that all but destroys Russia's ability to easily earn money to fund the war. Now, that's why we are seeing the ruble collapse, local Russians scrambling to get their cash out of the banks. Right now, it seems like the world is really trying to squeeze the life out of Russia by targeting one of the last few ways they can earn money in the global market. And the most shocking one is the attack on Russian gold. So, just recently, the LBMA has banned like 6 Russian gold and silver refiners from their list. This is quite groundbreaking because now Russia cannot even sell their gold to the London market, which is the biggest market for precious metals. And this cuts off one of their most precious supply of funds where they can get dollars to buy the things they need. Now, Russia produces around 330 tons of gold a year. That's around 9 or 10% of the world's global mine supply. So, just think about it. If you don't let Russia sell their gold to the open market, essentially you are constricting the supply of gold to the market by around 9 or 10%. Now, this inflicts a lot of short term pain on Russia, and there's no doubt about it, right? And it's no surprise that the price of gold promptly soared to over 2050 shortly after that. Now, if you restrict supply, it will just make the price of gold go up. But Russia isn't down and out just yet, right? So if Russia can't sell their gold for dollars easily, they can always ramp up buying their own domestic gold production with the rubles instead. Then they can trade or sell gold to countries like China and other shadow markets to raise dollars to really buy the essentials and continue funding the war. Now, the US is trying to shut down Russia's gold reserves as well, but it really won't affect them too much, right? Gold is physical wealth that really doesn't rely on any electronic system. There will always be avenues for them to sell off their gold. It might take a little longer, but it is still possible. And that's why, as stackers, we see value in gold, right? It is truly decentralized from the financial system. So we know that the supply of gold is being constricted by sanctions and money printing or rising debt is going to happen again. Can it get any worse or better for gold, depending on how you look at things? Well, yes, it can, and it has everything to do with the price of oil. So, oil recently spiked to around $130, and this is causing the prices of everything to go up. I mean, it goes beyond just the gas pump. Your food, your water, your products, the whole world is run on oil. Now, this is very basic, but I have to mention this, right? Gold doesn't magically appear in a vault in bar or coin form. It has to be dug out from the ground, transported to a refiner, refined, and then transported to you. And guess what is a big part of the mining, refining, and transportation cost? It's oil, right? It's so basic but important at the same time. And guess what? Biden just banned the import of Russian crude oil and gas to the United States. And let's munch a bit on the numbers, right? We can see that Russia is the world's third largest oil producer, almost at par with the Saudi Arabians. Now, in fact, Russian gas supplies around 40% of EU's natural gas needs, and it really doesn't take a genius to realize that if you shut out Russian oil and gas, the prices will spike up and remain high for quite a while. I really believe that this just makes things worse for the world, but better for gold. Alright, guys, I think you see the pattern here, right? It seems that things are really getting from bad to worse. They are, and this is the big one. So let me ask you a question. Let's say you stored your money with me, and when the time comes, I don't want to give it back, and there's nothing you can do about it, right? Would you still want to keep your money with me in the future? And really, this is essentially what every central bank is seeing happen as the United States and EU confiscated over $1 trillion worth of funds from Russian banks and even Vladimir Putin himself. Now, I'm not saying that the sanctions were wrong. In fact, I think it is necessary to put pressure on Russia to stop the war. But there are unintended consequences, and I believe we are at the start of what I call the Great Diversification, right? Every central bank are at the very least thinking to themselves, is my money truly safe being kept outside of my country? Should I diversify my reserves into something else? And what should I buy that has zero counterparty risk that I can store back home in my vault? And the answer is quite simple, right? It is gold. I think we're at the start of a big central bank buying spree down the road over the next few years and decades. We already know that the dollar is losing purchasing power year after year, and I believe this situation will just accelerate the move away from the dollar even more. Every time a bank or anyone buys gold, which is usually priced in US dollars, they are effectively selling away their dollars in exchange for the yellow metal, right? So as more US dollars leaves central banks' reserves and are thrown back into the market, this just weakens the dollar and just ramps up inflation even more. So for holders of gold, this is good news. But for those, heavily in US dollars, still in US dollars, your purchasing power might be in for a bit more pain down the road. So right now, it seems that the price of gold for the long term will continue to rise. On the short term, it's really anyone's guess, but can things escalate even further, right? I think there's one scenario that we need to take seriously. And that is if Ukraine's President Zelensky manages to drag NATO into the war. So if you aren't aware by now, Russia is winning the war on the ground while Ukraine is winning the information war. And before you think that posting on social media and Zelensky's constant interviews aren't effective, we need to think again, right? posting and sharing the horrors of war does sway public opinion. Just take a look at the Vietnam War, and it does have the power to force lawmakers to take action. And not all battles need to be won on the field. And frankly, Zelensky doesn't have a good chance of defeating the Russians in battle. The odds are really stacked too high against them. Now, right now, I believe the only hope for Ukraine to win is to somehow get NATO involved. And that's why, Zelensky has been pushing so hard to enter NATO, so hard for the no-fly zone. But the big danger is that if NATO does get dragged in, I will have to default to Murphy's Law, guys. Anything can go wrong, will go wrong. And this means that the United States could suddenly get involved with the rest of the EU, and before you know it, we will be in a global war. And if that really happens, the sky's the limit for gold. At that point, we'll probably be talking about, global money printing and the price of oil just skyrocketing. So the big question is, should I continue to buy gold? Now, this is the $1,000,000 question, and I think you really need to ask yourself one simple thing. Do you have the holding power? Right now, it's going to be a choppy ride, and even though the fundamentals for gold look stronger, the war in Ukraine could just end tomorrow. Perhaps Ukraine decides to surrender, or Putin gets sick of the sanctions and he suddenly pulls back. Weird as it might sound, it could happen. Will that affect the long-term prospects of gold? I really don't think so. But the reputation damage to the US dollar has already been done. Now, short-term wise, the level of fear in the world will decrease, and I won't be surprised if gold drops by quite a bit if the war suddenly ends. So you really gotta ask yourself, if you're buying gold to store your wealth, or if you're speculating and hoping for World War III to happen and gold to hit $5,000. You need to be getting to gold for the right reasons, and personally, I've been buying gold every month or quarter for years, and I really don't plan to stop now. Now, the crazy thing about gold is that the only reason why it will rise in price is because of either inflation or chaos. It's really what drives demand, and looking at the current state of the world, you definitely want to be holding some gold. So ever since 2020, we have been hit with crisis after crisis, and I can't tell you that everything will be better even if Putin's war ends tomorrow. And that's why I believe that diversifying some of your money into gold is quite a prudent move. Currently, stocks are down while gold is up, and that is how gold can really help smooth out the ride. I expect the great diversification might come sooner than we expected. I'm already seeing more interest locally into gold. Even friends and family who labeled me as Mr. Doomsday is now asking me how to buy gold. So there you have it, guys. Let me know what you think. Will gold continue to rise higher, maybe all the way to $2,500? Do you have enough gold stacked? Let me know in the comments below. And if you enjoyed today's video, be sure to smash that like button and subscribe for more gold, silver, and finance videos. Thank you all for watching, and I'll see you soon.